Why are so many doctors, lawyers, and engineers still stuck renting? One reason is the down payment. And today I'm going to be breaking down two loan programs that erase it, and I'm going to be straight with you about the parts that most lenders skip. Quick thing, before we start, if this helps you, hit the subscribe, drop your profession in the comments so I know who I'm talking to. All right, let's get into it. My name is Rey Valentin. I'm a loan officer, and I've partnered with GMCC, a nationwide direct lender. So, what is a doctor loan? Traditionally, it's called a physician loan. It's built for one specific problem. You've spent your 20s training, you're about to earn a great income, but you've got a ton of student debt on paper and not a lot saved for a down payment. A normal lender looks at that and says, no way. Well, a doctor loan is designed to say yes. And here's what most people don't realize. It's not just MDs or DOs. Depending on the program, it can cover dentists, oral surgeons, podiatrists, nurses, vets, pharmacists, and on the professional side, attorneys, engineers, architects, and CPAs. The key is finding a lender whose program actually fits your credential, and that's what we do here. So, as you can often qualify, as soon as you have a signed contract, you don't have to be years into the career, so residents, fellows, brand new attendees, new grads, this loan program is designed for you. Now, let's talk about why this loan program is so powerful. I see three main benefits. Number one, the little to no money down. Up to 100% financing. That can mean zero down on the purchase price. Compare that to conventional financing, where you're usually putting 3 to 10% down. Let's say on a $600,000 home, 10% down is $60,000 out of your pocket. The doctor loan can get you in for a fraction of that or nothing down at all. Number two, no PMI. Quick definition here. So PMI is insurance that protects the lender if you stop paying. On a normal loan, anytime you put less than 20% down, you're usually forced to buy it, and you can run in a couple $100, sometimes even more, until you've paid down to 20% equity. Now that's money that does absolutely nothing for you. With a doctor loan, no PMI, ever, even at 100% financing. That alone can save you hundreds a month. Number three, and this is the one that changes everything for residents, the DTI. DTI, or the debt to income ratio, is just your total monthly debt divided by your total monthly income. It's the number that decides what you can afford. Most lenders want to see it under 45%, but here's the trap. With a lot of conventional guidelines, if your student loans are deferred, they'll count roughly 1% of your total balance as a monthly payment. So if you owe $300,000 in student loans, that's $3,000 a month of phantom debt piled into your ratio. That single rule disqualifies a ton of doctors who could easily afford the home. A doctor loan is built by people who understand your situation. You see, it can often use your income-driven payment, or in some cases, set those deferred loans aside entirely, instead of that crushing 1%. And these lenders are more flexible on the ratio overall because they know your income is about to jump. That is the difference between a no and a yes. Now, you don't have to wear a white coat for this either. There's a second program. We here at GMCC call it the Easy Choice Graduate Program, and this is designed for degreed professionals in 5 fields: medical, legal, engineering, architecture, and accounting. Same philosophy. Up to 90% financing, as little as 10% down with no mortgage insurance on loans up to $1.5 million. Now, gift funds are welcome, so family help towards your down payment is absolutely allowed. And again, current or future, so you can use a signed employment contract starting within 60 days to qualify. Attorneys, engineers, architects, CPAs, this was built for you. All right, this is the part most people won't tell you. Zero down does not mean zero cost. Even with a doctor loan, you're still going to have closing costs, typically around 3% of the price. Reserves. Lenders usually want to see 3 to 4 months of the mortgage payment sitting in the bank after you close. And then, of course, the part everybody forgets, the cost of actually owning. You see, here in Texas, for example, we've got some of the highest property taxes in the nation and rising insurance. When the roof goes, or the HVAC dies, or let's say your water heater floods the garage, that's your bill now. That's not the landlord's, and that's real money. So the honest answer to should I buy or pay down my student loans first is, well, it's not a one size fits all. But when you're in a good financial spot and you've got a plan for your student loans, not just because rent feels expensive, my job isn't to talk you into a house. It's just simply to tell you the truth and help you time it right. One more, especially for residents on a $50,000 or $60,000 salary, because a lot of you buying a single family home right now may not be the best move. But here's a strategy that can be: house hacking. You buy a 2-unit property, live on one side, and rent the other. If you run the numbers right, your tenant rent can cover most of or all of your mortgage, and you build equity while you train. Some of these programs allow up to a 2-unit property with little to no money down. Whether the doctor program or the graduate program is a right fit for you depends on your exact situation. That's a 2-minute conversation. So text me and we'll figure out if the numbers work for you. So which one fits you? Physician or about to be, and you want maximum buying power? The doctor program, up to 100% financing, loans up to $2 million. Legal, engineering, architecture, or accounting professional? The easy choice graduate program, up to 90% to $1.5 million with no mortgage insurance. In a buyer's market, the advantage goes to whoever can actually move. These programs let you move now, the right way, when you're ready. Here's your next step. Text the word doctor to 945-270-8264. Again, that's 945-270-8264. We'll set up a quick, no obligation call, figure out which program fits, and get you real numbers to shop with, usually within a day. Now do me a favor, drop your biggest question in the comments and subscribe, because I'm going to be doing a part 2 that goes even deeper on the numbers. I'm Rey Valentin with GMCC, and whether you're just starting your career or years into it, your career is ready. Now let's get your home ready too.